In today's video, I am going to make a comprehensive, multi-layer analysis of the Australian dollar against the New Zealand dollar in the 5 minutes chart. Without further ado, let's get started. Before Vector 1 we can observe price falling in both major and minor flows of the market in unison. At Vector 1, we have major sellers completing phase 1 of their exhaustion process. Thus, it makes sense that minor buyers of the market took control of the market and exhaust their accumulated energy, while major sellers get into accumulation mode. Note that in vectors 1 to 2 these retracing buyers encountered very little resistance from sellers. Also, note that bullish candle 1 is a solid fractal candle, which signaled the origin of this major pullback. Note how precise this fractal candle is. At Vector 2, this is where strong sellers who are responsible for the downtrend right before Vector 1 showed up again and overcame retracing buyers from Vector 1. Let's interpret the information we get from Bearish Candle 2. It is an outside candle with a small upper tail and no lower tail. It has a large bearish body. It is also a solid fractal candle. The interpretation I get from this candle is that buyers were present at the beginning and they were attempting to bring the price higher, but sellers suddenly overwhelmed these buyers with a lot of volatility, which explains the shape of this bearish candle. After sellers' power overcame buyers' power, sellers drove the price down in quite an organized manner at the beginning. Note that each bearish candle after Bearish Candle 2 created a new lower low and lower high. The interpretation I get from this price behavior is that sellers are stronger compared to buyers. The second evidence that sellers are not willing to give up control of this market is the volatility. From Vector 1 buyers used 14 candles to create the retracement from Vector 1 to 2, while sellers only needed about 5 candles to cover the same distance. Note that Vector 3 is closed noise-free below Vector 1. This means that Vector 2 is rendered confirmed and solid supply structure of this market. This is why I draw a supply zone at Vector 2. This zone comes out of the turning point as the lower limit and the extreme of Fractal Candle 2 as the upper limit. In summary, up until now, we have the following contextual elements. 1. We have a dominant downtrend, which means sellers are strong enough to progressively create new lower lows in both minor and major flows of the market. 2. We have a confirmed and solid supply structure, which we can use later for stop-loss placement level, for logical reasons. 3. We have sellers' volatility being higher than buyers' volatility. Note also that I have drawn a blue pitchfork pointing upwards. This fork is grounded on the major vectors as follows. The initial pivot is placed at Vector 1 because this is the beginning of the major retracement by major buyers. The upper limit is placed at Vector 2, which was the termination of retracement by buyers from Vector 1, and the level where strong sellers appeared again. The lower limit is placed at Vector 3, this is the level where we assume that sellers have to relax to accumulate more energy for their next major leg down in the market. Note that I have also drawn a dark turquoise frequency line connecting lower lows vectors 1 and 3, the same line is extrapolated to high 2 respecting the same angle. The purpose of the pitchfork in the context is to establish an approximation of a level where retracing buyers might run out of energy, using the middle pitchfork line. And the extrapolated frequency line is used to establish an approximation level where strong sellers will take control of the market again in the near future. Observe how strongly the buyers retrace back to the middle pitchfork line. Remember, we are using the pitchfork to measure a potential area where these buyers might run out of energy again. Observe how the volatility of these buyers decreased dramatically as the price nears the middle line, and then after the price test this line it generated a bearish solid fractal bar. If you compare the highs of price action and respective highs of the RSI indicator, you will note a bearish hidden divergence between high 2 and our potential high 4, which make this fractal candle a second-degree bearish fractal hybrid bar. In final summary. 1. We have a second-degree solid bearish fractal hybrid candle happening near our confirmed and solid supply structure. 2. We have a dominant downtrend. 3. We have sellers with higher volatility than buyers of the market. After the fractal candle, I triggered a short position with my stop a few pips above the seller's turning point line, and my profit target is 3 times the stop size. If I am correct in my market reading, sellers will not allow buyers to break the turning point line. That's why I confidently place my stop loss order there. My profit target is 3 times the stop size for long-term sustainability. If sellers that I'm counting on are truly strong and continue to maintain this downtrend, my profit target will be triggered successfully. After 4 hours 11 minutes and 5 seconds. My profit was triggered successfully with a 1 to 3 risk-reward ratio. I want to bring your attention to how the price retraced back to my entry level a few bars after the price broke the lower limit of the pitchfork. Note how price action reacts when it reached the intersection between the lower pitchfork line and the extrapolated frequency line. Such intersections are called energy points, and they tend to attract price, as you can prove from this trade. Also, observe how many times price tested the extrapolated frequency line before taking off with very high volatility that cannot be even compared to any other in the chart down. This is the situation the trader needs to maintain strong trading psychology and maintain his or her trade position in the initial logical places. Most retail traders will close their position with small profits when they observe this type of behavior, which is good in the short term but deadly in the long term. Note also how price respected our frequency line and extrapolated frequency line and then suddenly increased volatility to the downside as we were hoping for. If you like this video, please consider clicking the like button, subscribing to my YouTube channel, sharing this video with your fellow traders, and leaving your comment below. Don't forget to click the notification icon so you can get a notification every time I upload a new video. Thank you for watching, and I hope to see you in future videos.